So I reached out to Pete yesterday because I was interested in buying some protection on the portfolio. And Pete's my personal shopper when it comes to options. And I'm looking what to do. So even though the VIX is down, volatility is down, some of the options are actually still pretty expensive depending upon the underlying equity. But I'm getting a little nervous about the market. Even though the market's not had a great week, actually, if you look at those stocks, they've had a phenomenal week. And those are the core of my portfolio when you throw in Taiwan Semi there. So because it's extended, even though I think these stocks, each of the ones you mentioned, maybe with the exception of Micron, could go up 5 to 10-fold over the next 5 to 10 years because of 5G, which will become extremely dominant. I thought short term, let's get some protection. I wasn't interested in selling those stocks and triggering a tax event, but I was interested in taking some protection out. So that's what was behind it.
Why are you nervous about the market?
Well, those stocks in particular have had just a meteoric rise recently. And when you take a look at Taiwan Semi, which is up about 12% at one point yesterday, that's a big move. And you've also got a lot of good news out. So I don't think it's any secret, particularly with Biden last night coming out with $1.9 trillion in stimulus for COVID, that he's going to come out with another $2 to $4 trillion in infrastructure. Then you've got the first 100 days, which are not going to be great, because it's still, you've got so much anger between the parties and the administration that I think you've got to see the enthusiasm temper a little, and then you'll go back in. Markets don't go up in a straight line. There's always some risk to it. We've gone through a lot of the risks, and now I think that you'll take that pause, take that breath, and then it'll be back off to the races. But, 5 to 10% down is not out of the question. And I just thought this was the timing to do it.
Interesting. Brenda, is it nervous time?
Well, I think the fact that this is the worst week since October is a testament to just how strong this market has been. We've had an incredibly strong move, especially in areas outside of large caps, so small cap equities in particular. But as we look forward, I think it would be healthy to see some kind of correction or pause here. I agree with Steve that, after last night's announcement, the biggest question is, well, now what? I think we need to get more confirmation that the vaccine is rolling out more as planned and the economies can really start reopening. And it's going to be a little while before we get there. But as we look to the second half of this year, we still feel very strongly that we're going to see a meaningful pickup in the second half of this year and into next year. So we are staying invested, but we've been shifting away, as Steve sounds like he has been too, away from more technology growth-driven sectors into more cyclical sectors where we see more opportunity.
Jason, this idea that, growth has been underperforming, and the notion that until growth gets its mojo back, the market in general is going to have a hard time breaking out of this, if you want to call it, range that it's been in, sort of, fits and starts here and there. It looks like it could be about to break out, and then it reverts back. Do you subscribe to that?
I do, Scott. So I think, when I think about the Biden agenda, it's a new agenda. I think the market's starting to digest what that looks like. The 10-year's up almost 50% over the last 3 months. I mean, there's some inflationary concerns going on. And obviously, we have fiscal stimulus sloshing around. So I think those are areas that are accelerating the value trade. And, this year will be all about earnings growth, and I think what we'll start to see over the next couple of quarters is, particularly as we head into earnings seasons with the banks today and going into next week, show me. I think it's all about show me right now, and we'll see how that works out over the next few weeks.
Yeah. Pete, look, you've been, I guess, a little more concerned of late about where the market is, and you've sold down some of your equity positions to reflect that caution or tepidness that you may have about where the market is. But what do you do with the fact that growth has been outperforming? I think Carrie Firestone yesterday said that she had trimmed a little bit of Apple. Now you got Weiss playing the options in Apple, looking for maybe some downside among the suppliers as well. What about you? Because Apple's a pretty decent position for you, too.
Yeah, I've done a little bit of almost the opposite because of the implied volatility in some of these. And Steve is right. There are some names that the implied volatilities are higher than you might expect because where the VIX has dropped down into the low to mid 20s from where it was at a much higher levels. But the reality is in some of these names, the implied volatilities are low and they do give you an opportunity. And I've actually, as you know, I added some calls just the other day in Apple. So I do think that there is this pause, and we've had this pause for a while now, and sooner or later I think we'll see some moves again. The one move that I did make last week, and we talked about it last Friday, was I had been long spider calls, and then I flipped that around, sold out of that position, and I have spider puts. And that's basically the hedge that I've got for my portfolio. It's very similar to trading the VIX, but it's a much more liquid ability to be able to move in and out the way I'd like to. So that's why I moved over to the spider. But I'll tell you, it's amazing to look at what we have seen to the upside, Scott, in these runs. And I understand why Steve, when we were talking yesterday, it makes some sense of why he wanted to do some of that covering, because take a look at the SMH. We talk about tech all the time, but specifically the semiconductors, and you take a look at any chart at almost any time frame you want, and all it looks like is a basically straight up. It's had an absolute rocket ship of a run. It's gone to highs. You look over at biotech, same sort of story. It's gone to highs. So those are a good reflection of why we're seeing the NASDAQ, as that's gone to highs as well, because it has been a pause that we've seen out of technology, but other aspects of NASDAQ have been performing really, really nicely. So I think it's just a matter of how much nervousness you have, whether or not you want to take positions actually off, you want to have protection in place. And I think protection it does make a lot of sense. I think Steve's protection made a lot of sense for what he was looking for from the market over the next couple of weeks.